Hello, and welcome to this, the 8th episode of Season 4 of the Dark Money Files, in which we shine a light into a murky world. I'm Ray Blake, and with me is my co-host, friend and business partner, Graham Barrow. Hello, Graham.
Hello, Ray.
Last time, Graham, we talked about the European Banking Federation's recent report, lifting the spell of dirty money, and we got about halfway through its recommendations.
That's right, Ray, and we will finish our look today. But first, though, it seems a good time to reflect on what we've been doing to adapt to the lockdown conditions.
It's been a funny old few weeks, hasn't it?
It really has.
On Tuesday afternoon, we took the Dark Money Files live online.
Not without, I must say, a certain amount of trepidation.
But I think it went well, Graham.
It certainly did, Ray. We had about 70-odd people online learning about the dangers of UK shell company entities and putting up with our dad jokes.
Yes. Feedback has been really good, and the word you hear most frequently is fun, which I'm not sure you hear a lot in the current profusion of industry webinars.
Yeah, that's true. And having a laugh doesn't mean you're not taking the subject seriously. And when we got to the Q&A section, it was clear that the people who joined us on the day were committed to the good fight.
Quite so, Graham. Our presentation lasted about 45 minutes, and then we spent a similar time addressing the questions people had raised.
And it was fun, wasn't it? And for a first go, I think we were really happy with it.
So much so that we're going to repeat the exercise.
Yeah, this Friday in a morning slot that will be rather more accommodating to our APAC listeners.
How can people register for that, Graham?
They can come to the website, darkmoneyfiles.com, and you'll find a link to the booking page, but you could also click on either of our profiles on LinkedIn or just go straight to Eventbrite and search for the Dark Money Files. You will find them at all of those. And we're not limiting spaces, so nobody needs to miss out.
But I would mention this is the same presentation that we gave last week. So if you were on that one, you'll probably want to wait for our second topic, which will be along in a couple of weeks' time, we hope.
Yeah. So when you visit the booking page, just on our website, just point out that you will find a donate button. And we thought long and hard before adding that.
Yes, we're running these events for free and people are welcome to keep coming as long as they like on that basis. But like many individuals and businesses, the coronavirus has somewhat disrupted our normal income. So if you're interested in attending the event and would like to help us cover our costs, it would be appreciated and it will make further events over the long term more likely. We've added a donate button to the registration page on our website. You can click and contribute if you'd like and are able to, but please don't feel under any compunction to do so.
Indeed, if you can't or you just don't want to contribute, that's absolutely fine and no one will think any less of you. But massive thanks to the people who have already contributed. We are chuffed to have had such generous listeners.
In the meantime, though, we're delivering a whole bunch of online taster sessions for our forthcoming Corporate Investigations Masterclass. Graham, that's your brainchild. Do you want to explain what it's all about?
Well, Ray, what can I say? I would love to say it was part of a long-term strategy, but the truth is that I woke up a week or so ago and needed a bit of a challenge, so I thought I'd post on LinkedIn to see if what I thought there might be a handful of people who'd like a bit of training on corporate investigations.
Turns out there were.
Well, Ray, yeah, that post has now been viewed more than 29,000 times.
29,000?
Yeah, and so what started off as a possible little side project for me to fill a bit of time during lockdown has become a major Dark Money Files project, which over the next few weeks will be delivered by both Ray and me in order to meet the enormous demand we've had. I know a lot of people were disappointed to miss out on the taster sessions, so we are currently working to build a reliable mailing list so we can keep everyone informed of progress.
It's really quite exciting, isn't it? And I'm really looking forward to joining you and 200 participants who did manage to enrol in the 10 taster sessions that we'll be delivering next week.
Yes, and for those of you who are catching up on back episodes, that will be the week of the 27th of April.
Well, I for one can't wait until we can get back out and interact with people face to face, but as we're finding out, there's plenty we can do in the meantime.
Well, absolutely, Ray, and it just may be, given the global reach that these courses have engendered, that our lives in future will always be a mixture of face to face, which we both love, but online. And that's just one more thing that's been fundamentally changed by the coronavirus.
I think you're right.
But, Ray, back to the EBF report then.
I think so. Remind us, Graham, who the EBF are.
Well, Ray, they say, and I'm quoting, they are the voice of the European banking sector, bringing together national banking associations from across Europe.
We've been reading through their report, Lifting the Spell of Dirty Money, which contains recommendations in 4 key themes or priorities: harmonise, empower, cooperate and be smarter.
Yes, and we've talked so far about the first 2 priorities, which were harmonise and empower.
Picking up where we left off then, priority 3 is cooperate, and there are 7 recommendations that fall within that category.
Yes, and this is about having a coordinated approach to combating money laundering from all parties: law enforcement, legislators, judiciary, supervisors and financial services and other market participants.
Yeah, the report starts by noting that this cooperation has often been ineffective and cumbersome, especially when there are cross-border issues, with the ultimate effect of creating systemic risks and threatening financial stability.
Yeah, Ray, which in our circles are harsh words indeed, and we should pay attention. So, I see the first recommendation is to adopt a coherent approach for information sharing, balancing data protection and financial crime prevention.
Yes, the EBF notes the perceived, and I would argue real, tensions between the European AML and data protection rules, and calls for better alignment between the two, as well as a review of national confidentiality and secrecy regimes, and that would be using the FATF recommendations as a guide to what's proportionate and justifiable.
That's actually quite a big job, isn't it? As you say, there's a real tension between conflicting rules here. There's actually a lot less conflict maybe than people perceive, but there is still a central dichotomy.
There is, and the second recommendation speaks to this too.
Yes, it is, quotes, adopt an EU EEA-wide GDPR AML CFT guidance, and Ray, that is a lot of initials in one sentence.
Yes, it is, but I think we know that initials apart, the industry is crying out for this.
Yeah, the EBF highlights several points of ambiguity. For instance, they note that GDPR allows firms to retain personal data for as long as necessary in order to achieve a legitimate purpose, while the AML directive requires personal data to be deleted after the AML retention period has expired, with ongoing retention permitted only in narrowly defined circumstances.
The report notes that it's unclear how to apply the GDPR rules in certain other AML situations too. So clearly guidance is something that would make a big difference here. When every firm just has to muddle through and work it out for themselves, there can't be any consistency in application, and the law can't be said to be effective.
Yeah, we know that ineffective laws and rules only benefit the bad guys.
Indeed. So what's next in the recommendations?
Well, next comes one to facilitate enterprise-wide reporting of suspicious transactions and activities.
And this links to an issue we spoke about in the last episode when we looked at the first part of the report, that of issuing directives instead of regulations. It means that transposition in individual states can vary, and where there are subtle differences in data privacy laws, the stricter of the two, or possibly more than two, interpretations has to hold.
Yeah, which means that data sharing is always being driven down to the least allowable rather than the most.
Exactly. And sadly, the wider sharing of information might be possible already, but the regulations have been written in such a way that no firm is prepared to take the chance of breaching GDPR inadvertently, so clarity is much needed.
Yep, and if that clarity needs to come from further regulation, well, so be it.
Yes, and the same thing applies to transaction monitoring, which is the next recommendation. The report points out that in the Netherlands they're already running a pilot where the major banks are sharing transaction monitoring data to enhance their ability to catch suspicious activity.
Yeah, they're adopting the not in my country rather than the not in my bank approach.
Exactly.
And then, Ray, I see the report goes on to talk about public-private information sharing.
Yes, which reads a bit like GMLIT 2.0.
You might need to explain that, Ray.
I will. GMLIT is the Joint Money Laundering Intelligence Task Force. It acts as a one-stop shop for regulators, law enforcement and the major banks as a forum to share intelligence, but of course there are restrictions.
Yes, but of course these are also in-country initiatives, and the report calls for a pan-European approach in the same vein, particularly in the case of banks which operate multi-jurisdictionally. But given the interconnectedness of the financial system anyway, cross-jurisdictional information sharing between all these different agencies and actors is essential, given that the criminals don't obey the niceties of borders and legislation.
An organised cross-border response to organised cross-border crime, Graham.
It's become a mantra, Ray.
And I suspect will remain one for some time. The next couple of recommendations fall into the same vein, but look specifically to enhance the role of Europol's Financial Intelligence Public-Private Partnership, as well as calling for an improvement of cooperation between public authorities.
And there's nothing too controversial there, Ray, or indeed anything that we wouldn't agree with.
No, which leads us on to Priority 4, Be Smarter.
And that Priority 4 immediately raises the thorny issue of KYC utilities.
It's one of those ideas which has been around for a while, but I'm not sure anyone has successfully cracked how to run them in the real world.
No, at least not without homogenising different banks' risk appetites in order to make the KYC applicable across institutions.
Or simply using the utility to do the bare bones KYC that all banks need to do, irrespective of risk rating, which then begins to lose the economies of scale.
Yeah, but there is one area that we would strongly support, isn't there, Ray?
Yes, Graham. If we provided Companies House with the ability, the resources and the funding to perform full due diligence on all registered entities, such that banks could rely on the information in the register rather than going to the entity itself or other independent sources, well, that would make a huge difference to the costs of onboarding UK companies.
It would, and it would also act as a powerful deterrent to those wishing to mask their criminal endeavours through using such a corporate vehicle.
Absolutely, and if we combine a robust and transparent beneficial ownership register, whether that's through Companies House or some other mechanism, with the new sciences of artificial intelligence and machine learning, we'd be on the verge of employing the most powerful tools available to detect and deter criminals from using corporates in the financial system to launder their ill-gotten gains.
Which is, to be fair, entirely the thrust of the Be Smarter section of the report.
Well, it is, yeah. So there we have it, the EBF report in summary. It's definitely worth an hour of anyone's time to read it in detail, though, because I think it prefigures some of the really important changes that are going to be coming down the pipe in European and other financial crime legislation over the next couple of years. What's next, Graham?
Well, Ray, it's a busy week coming up as we will be delivering all those taster sessions, plus a second run out for the Dark Money Files Live online that's coming Friday at 9 o'clock. And to facilitate attendance, as you'll remember from earlier, for those in other time zones where an afternoon event wouldn't work quite so well.
Yep, details available on our website or on LinkedIn.
Yep, and next time round for us, Ray, for the podcast, we've been talking between ourselves about some of the more profound impacts of the coronavirus crisis, and I think we might be ready to share some of those. Plus, I hope, an update on the Dark Money Files conference scheduled for later in the year.
I'm looking forward to it.